Good morning. I'm Peter Milios from the Finance News Network. The S&P 500 and the Nasdaq Composite hit new highs as Apple shares surged on AI news. The S&P 500 added 0.27% to close at a new high. The Nasdaq rallied 0.88% to also set a new level. The 30-stock Dow Jones bucked the trend to close 0.31% lower on the day. The key news on Tuesday was the surge in Apple shares following the company's announcement on new AI features and operating systems that is likely to trigger a wave of iPhone upgrades. Nvidia saw investors rotate out of its stock and into Apple. Apple closed at a new record, rising 7.26% to $207.15 a share. Nvidia closed 0.71% lower. Attention will now shift to the Federal Reserve policy meeting, which commenced Tuesday and will conclude on Wednesday US time, and the May CPI number, which is due out 10:30 p.m. Australian Eastern Standard Time. Investors were also encouraged by a well-received US government sale of US $39 billion of bonds, which raised hopes that the Fed will pivot to rate cuts later this year. Demand was strong, with the bid/cover ratio of 2.67 being the highest since February 2022. The month before the start of the tightening cycle, according to Bloomberg. Fed funds futures were indicating no chance of a cut at this week's meeting or at the following one in July, according to the CME's Fed Watch tool. Turning to US sectors, all sectors except for tech and communication services closed lower overnight. Financials was the worst performer. Turning to commodities, China's central bank halted its gold buying streak in May after 18 months, coinciding with a record rally in gold prices driven by safe haven demand from March to May. Despite this pause, China's gold reserves remained unchanged at 72.8 million ounces at the end of May, following its status as the largest official sector buyer in 2023, with net purchases of 7.23 million ounces, as reported by the World Gold Council. And looking ahead to the Australian landscape, the SPI futures are pointing to a 0.5% fall. Thank you for listening.